Hi, I'm JD Park,
I'm TJ Shelley.
and this is One Stop Real Estate.
Today we have an amazing guest. We have Steve Bourne here with Grandview Insurance. Steve is actually my brother-in-law, so I've known Steve, but basically feels like my whole life.
Yeah.
So he's a good guy, but I guess just to get us started, what got you started in insurance? How long have you been doing it?
Yeah, I started doing insurance myself in 2010, June of 2010. I remember June 1st, I wrote my first policy. I actually was considering doing mortgages because of the family tie.
Yeah.
And TJ's brother, Corey, actually came to me and said, hey, one of the challenges we have as loan officers is getting insurance from insurance companies and agencies that take forever or won't do things that we need them to get our loans done. And so he said, he knew a guy in insurance. He said, hey, talk to him and see if maybe doing insurance would be a good gig for you.
Yeah.
So we kind of worked some details out and been doing it ever since.
Sweet.
Yeah.
I know quite a few people that do insurance or have tried to get into the insurance industry. What's the barrier to entry to get into it, and then what does the competition field look like?
Sure, yeah, it's very competitive. It's tough to start. I actually started 2010. I didn't launch my own agency until 2015. And those 5 years, I worked for a different agency. I'm still good friends with them. I entered into an agreement with them to be with them for 5 years, buy my business from them, and then be on my own from them. So it's difficult to do it any other way.
Yeah.
There are some other ways, but that worked out really good for me to just get a start. Once I got established, bought that, started on my own from there.
Yeah. With your career taking off, how long did it take you to really get into a comfortable place? I know it's a sales position, so every industry is going to be different with how quickly you seek success. How long did that take you?
Yeah, so different types of insurance are different as far as commission. But with auto and home, which is kind of the purpose of our conversation, you don't make very much for a policy. So
Gotcha.
It takes a good little bit. It's all renewal based. So every year policies renew. If that person keeps paying and keeps renewing that policy, I continue to get paid each year. So once that kind of builds up, it takes a few years depending on how much business you're doing. It took me most of those 5 years to get to where I wanted to be on my own and kind of be self-sufficient at that point. So it took me probably year 4, I was feeling okay. And then year 5, I was like, okay, I can do this on my own.
What would you say, starting out with an agency or you starting working for another agency, what's the benefit to working under another agency like that?
So when you're coming in trying to they call them appointments, get an appointment with a company so I can write their policies, they don't know who I am. They don't know anything about me. And they're like, why should we appoint you to write policies for us? They don't want to just appoint anybody. They want to kind of know what kind of business you're doing, that you can bring business to the table. So it's kind of a catch-22, where you can't get them to give you an appointment and tell you do business, but you can't do business until you get an appointment. Right? So to start under somebody else, say, hey, this is what I've been doing with them.
Yeah.
I can buy this from them, continue on myself.
Absolutely.
So that's kind of how everything worked out.
Yeah, I mean, we definitely see that in the real estate agent field. People don't trust you because you've never done a deal before. Sure. It's the biggest purchase of their life. So either finding a mentor or really just working under someone else as an assistant is a great way to start. So
for sure,
that's awesome.
And I learned a lot from them too. They helped me out getting started.
When it comes to finding clientele, do you normally go after businesses, individuals? What kind of marketing do you do for that?
Yeah, so it's good to have TJ's connection with the mortgage world. Yeah. It's been slow right now, but for the past little bit. But that's really where I've gotten the majority of my leads is from people getting mortgages. Hey, I need a good insurance guy. Do you know anybody? And then I get the referral from there. So, and then I try to get referrals from referrals. So people that I write policies for, hey, who else can I help? Stuff like that. I've really spent very little money on actual marketing.
Oh, sweet.
There's a lot of different things. There's internet leads. There's all kinds of stuff you can do to spend money on, but I haven't really had the need over the years to do that. So
sweet.
It's been very good.
Awesome. Is there a specific field that you like to cater towards when it comes to insurance? Do you do all types of insurance, or do you specify and specialize?
Yeah, good question. There's a couple big ones I don't do. I don't do health insurance. it's just kind of a pain.
Gotcha.
Everything changed a few years ago, and it's
Yeah.
just not worth getting into, in my opinion.
Okay.
I also don't do most commercial business. I'll do some, the simpler office buildings and stuff like that I can do no problem. But anything more complicated than that isn't my forte. So I have some other friends that's all they do. So I'll just send them on to them, get them taken care of.
And what would you say, like, for that, what types of insurances do businesses like that typically need? Is it like business liability or?
Sure. Depends on if you own a building, you rent a building, there's usually some sort of property coverage. Whereas the building itself, or just your stuff that you bring in, like your business personal property, as well as liability. And that can take on many different shapes and forms based on what you do.
Yeah.
So
Awesome.
there's a lot of ins and outs to commercial insurance, a lot of specialty coverages that if you're not in that field, you wouldn't know about. So I honestly don't have time to learn it, and I don't have a desire. So I got some friends that do, and I'm like, you handle that stuff for me.
When you guys do referrals, is there like a referral fee that's paid out, or is it you just straight up say, here you go?
No, there's laws against
Okay.
paying referral. I mean, there's ways to do it legally.
Yeah.
So if somebody feeds me referrals and I pay them for each one, regardless of if I have talked to them or not, that's okay. But if I just pay them for the ones that buy insurance from me, that's where it becomes a problem. So
Gotcha.
usually people don't pay referral fees. It's just not worth the risk, I guess.
Yeah.
But it does happen sometimes.
Okay.
So
That's good to know. So since our podcast is real estate based,
Sure.
And you already prefaced with the fact that we were going to talk about home insurance, of
Yeah.
course. Can you walk us through a standard home insurance policy? What's all included?
Sure. So I'll preface this by saying every company is going to be different. They have the same basic coverages, but some are going to include stuff standard. Others you have to add. Others you have to add through endorsement. So always check with your agent and your company first before you buy a policy or expect something to be covered. But the basic coverages are you have, of course, coverage for your house itself. Consider you're talking about a house or a condo or whatever. The property coverage, that's what you think of when you think of a home policy. But there's a lot of other stuff it covers too. So your built-in coverages, coverage B is other structures. So if you have, a detached garage or a storage shed, anything like that, you're going to have, that's usually around 10% of what your home is covered for that built in. And
Gotcha.
usually you can go higher on that if you have some big extravagant thing in your yard, but usually they won't let you drop that. Every once in a while I run into a company that'll let you drop that down if you don't have anything, but it's usually just a built-in coverage.
Yeah.
And then you've got coverage for your personal property. So everything that you move into your house when you move in, you got coverage for with some limits. So most collectible items are going to have limits on it. The big one is guns or jewelry, stuff like that people collect.
Yeah.
That can be worth some money. They're going to have special limits. So if you have stuff like that, tell your agent you can get them on there, but it's not covered automatically.
So when somebody has a collection of like antique things can be really valuable,
Sure.
they'll have a limit of how much can be covered. Okay.
Absolutely. Yeah.
Sweet.
And it's
Is
usually
it-
pretty low, like
is it-
$1,500, $2,500 depending on the company.
Oh, wow. Okay. Yeah.
So if you want more than that, you can absolutely do it, but it has to be added separately.
Gotcha.
And I assume it's just stated value.
Yes.
Okay.
Yeah. And usually it's all peril. So no matter what happens to it, usually it's covered with a deductible. So it's a really good thing to add if you've got stuff.
And is that per item or is that collectively?
So you can do it either way. So if you've got, I've got some people with, $100,000 worth of jewelry split up along 25 pieces, and we can just do a kind of a blanket. Or you can do, if you have two things that are really valuable, you can do them separately. So it's kind of the same thing, just a matter of how they want to schedule it on there.
Okay, sweet. I see these memes all the time of like a fire happening or something like that, and then they're like saving their golf clubs because they don't have them insured, things like that. So
Yep.
That's funny.
Stuff can get pricey.
Yeah. What is the difference between replacement cost and actual cash value, and which one do you guys use?
So I will not write a actual cash value policy. If you want that, you'll have to go somewhere else.
Okay.
It's very simple. Actual cash value is replacement cost minus depreciation. So they're going to take, okay, what's it going to cost to replace? And then how much is it depreciated since it's been new? And that's what they'll pay you.
Yeah. And as far as the mortgage side goes, like we don't accept that. We don't want that either. Because if it's actual,
pretty uncommon at this point.
if it's actual cash value, they'll come and say, okay, well, the actual cash value of your home is $200,000, but your loan is for $400,000,
Yeah.
you're going to be short
That's a
$200,000.
problem. Yeah.
So, yeah, I think that's why I never really see it, is because it needs to be either guaranteed replacement cost,
Sure.
or the coverage A, like the actual dwelling coverage, needs to be sufficient to cover the loan amount.
Sure.
That makes sense. When it comes to natural disasters, are there certain ones that are standard? Does that change per state? I know there's some talk about Florida right now because of insurance policies. What are natural disasters that are covered in Utah?
Yeah, good question. The biggest thing, again, every company's going to be different, so
Right.
check specifically with your company to make sure. Generally, well, I can tell you, no home policy covers flood. That has to
Okay.
be purchased separately every time. I have run into one company that I'm not even associated with, but I heard about that will offer like $10,000 worth of flood coverage, which isn't a whole lot. So if you want coverage for flood, you have to buy it separately. There's the National Flood Insurance Program through FEMA, through the federal government, that offers it, and then there's a handful of private markets too. But that's not going to be covered. So,
Gotcha.
but with that, flood is different than water damage, which a lot of people don't understand. So a flood, generally speaking, is going to be outside water coming in, and water damage is like interior water. So
Like a
if
pipe burst or
breaks,
something.
Yeah, I had
Gotcha.
one where their washing machine, the sensor went out on it, and it was filling up. It was supposed to stop, but it didn't. It just kept going, overflowed all the way down into the basement. Stuff like that is covered under water damage.
Gotcha. And is water damage in your typical, your standard insurance?
Usually it's covered,
Okay.
yes. Yeah, almost
Okay.
all the time.
Sweet. So inside damage from water is usually covered.
Usually covered, yeah.
And then flood insurance you have to get separately.
Exactly.
Yeah.
Okay.
Yeah. And then along with that, earthquake is something that's never going to be covered automatically. It's something that you can add to a policy. You don't have to purchase separately. Well, depending on the company, some don't offer it anymore, but you always have to add that separately. And it's pricey. It's going to cost you a lot of money, and
Yeah.
it has a separate deductible that's also very, very large.
Yeah.
So most people that don't have earthquake insurance have it for those reasons.
Yeah. And so I know that there's flood zones and liquefaction zones.
Sure.
Is there restrictions to properties being allowed to have that, even if it is pricey?
For flood insurance, you mean?
Yeah, or earthquake insurance.
So certain companies won't offer earthquake insurance in certain areas.
Okay.
Like up on the East Bench
Yeah.
here in Utah, a lot of companies won't offer it there.
Just because it doesn't make sense, because it's more likely to happen.
More likely, yeah. Mm-hmm.
Okay.
Yeah, I mean, there's always markets for it. I got
Yeah.
a few that won't and several that will. So there's always a market for it. As far as flood insurance, you can get flood insurance no matter where you live. It's just a matter of really how much it costs.
Yeah.
So the private, I have seen in my own experience that the private markets do better in high risk zones. The National Flood Insurance Program is actually really good. If you're in a low risk zone, it's going to be pretty inexpensive. But if you're in a high risk zone, private market, if the mortgage will accept it,
Yeah.
is
Yeah.
usually
If
better
it's
priced.
sufficient coverage. But yeah, flood insurance is, I feel like the flood insurance I've seen is pretty pricey.
It can be.
But
Yeah.
Did you get a lot of phone calls from all the flooding that happened in Provo and Orem? Like a couple weeks
Surprisingly
ago?
not. A few, but
Really?
I was expecting more. Yeah.
Hmm.
So,
Gotcha.
yeah.
Did they have flood insurance, or were they expecting?
I had one who had a condo flood a little bit. It wasn't too bad, thankfully, and they
Yeah.
did not have flood insurance.
Gotcha.
Yeah, most people see that they don't have to have a flood policy because it's not required,
Yeah.
and they're like, "Oh, I'm not in a flood zone. I'm good."
Yeah.
So
Yeah.
you can always, any property can flood.
Gotcha.
Nobody's immune.
Yeah. How did that conversation go? Did they take
she
it
knew.
well?
I tried to
Okay.
tell people,
Yeah.
you don't have to have it,
Mm-hmm.
but like I said, you're not immune. So if you want it, I'm happy to get you a flood policy. If not, if you flood, you're kind of on your own.
yeah.
So
Yeah.
thankfully it wasn't a ton of damage. So she wasn't, and she knew. She was like, I just want to make sure I don't have this. I'm like, yeah, unfortunately there's nothing there. So
Yeah.
With that, so how could you play out how it would look like if there was an earthquake? Because I feel like most of the people I run
Yeah.
into don't have earthquake insurance. Like
Yeah.
probably only 10% of the people I do loans for actually choose to have it.
Sure.
So what would happen if there was an earthquake and a lot of homes had structural damage?
Yeah. If you don't have earthquake insurance, there's just no coverage there from
Yeah.
your insurance company. So you're
Can you depend on like FEMA or?
Yeah, I was gonna say I'm sure FEMA would come in and offer something.
Yeah.
I don't know what that would look like, but as far as the insurance company paying out to fix your house, it's
not gonna happen.
It's not gonna be there. Yeah.
And FEMA's the federal government, right?
Yep.
Okay. Makes sense.
And sorry, going back to, I know that we talked about some coverages, but like I know that there's other coverages like coverage E, like personal liability, injury.
I'm trying to think of where I left off. Personal property.
Yeah.
Yes. So all the property coverages, A, B, and C, are going to be subject to your deductible.
Yeah.
So structural damage, personal property damage, other structures. If something happens, they'll cover it, but you're going to pay your deductible first. Usually $1,000. That's kind of a standard deductible. You can go, well, it's kind of rare to go lower than that, but you can go higher. The next ones, personal liability and medical payments, there's no deductible associated with those. And you have personal liability coverage to back you up in court if you get sued for something that you were negligent for, I guess. So the classic example is a dog bite. Your dog should have been on a leash, but it wasn't, and it bites somebody, causes damage, and you have to pay, whatever for bodily injury.
That's interesting. That's the most common.
So that's why they ask if you have dogs.
Yeah.
On your home insurance. That's the reason.
And that's what I was thinking, because I always see, and I don't think a lot of people realize that they're covered in situations like that.
For sure.
But I see it on all of the policies that you do. There's money. I feel like it's usually around like 300,000 or so, and it's for personal injury. And it's, I feel like a lot of people aren't aware that they have that, but I'm sure it's fairly inexpensive to add, and they're going to be grateful to know that they have it if something like that ever happens.
For sure. It is a built-in coverage, so you can't take it off.
Yeah.
You can go anywhere generally from 100,000 in coverage is kind of the lowest, up to some will go as high as $1 million.
Yeah.
And it's inexpensive to increase. So I try to do between 3 and 5. 300,000 to 500,000 is kind of where I stay.
Yeah.
So yes, if you have a pool, you should have a lot of liability coverage for sure.
Yeah.
That's good to know.
And then the last one, is medical payments. That's a lower coverage. It's usually 1,000 to 5,000 generally, and that's it's kind of a different thing. It can apply to a lot of different things, but it's generally no fault. So if somebody, like a salesperson, is walking up your steps to knock on your door and he falls and breaks his arm, that's where that will pay out.
Gotcha.
So I did nothing wrong.
Yeah,
it's just him
just completely random.
Right?
Yeah.
So that's where that comes in.
That makes sense. I know you said earthquake and flood insurance are not typically included. Are there any other excluded insurance policies that people can get or just aren't in your standard insurance?
Those are the big ones. There's a lot of stuff you can add to your policy.
Oh, really? Okay.
A lot of endorsements. There's certain ones that I try to add all the time that people don't realize happens a lot. Like a major one is backup of sewer and drain.
Okay.
So if something happens to the sewer line and it backs up, you don't want to have to deal with that. And it happens more than people want to think about. So that's something that I add. It's not expensive. So I try to put that on there. If people want to take it off, I will, but I try to add it on everything.
We just had a property that had a backup of their sewer line, and it was covered by insurance.
Good.
So, that I can vouch for that. That's a good one to have for sure.
Yeah, the other big one I try to put on all the time is, now they all call it something different, but buried utility lines is kind of the general term for it. So the main water and sewer lines coming from the city line in the street to your house, they're buried way down there so they don't freeze, and if something happens to them, it's very expensive to fix those lines. So you can now, with most companies anyway, you can now add coverage for those if something happens to them.
When you say very expensive, what's the price range?
Usually between $10,000 and $20,000 to fix those lines.
Gotcha.
Yeah.
Okay. When determining what is the right coverage for your property, I know that an insurance specialist will be able to determine that, but before deciding on insurance, how can the average person decide how much insurance or what the right amount of coverage is for their property?
Yeah, good question. So that brings up another point I wanted to bring up. The market value and the replacement cost, which is what I'm concerned with, can be very different. So the market value is going to be what your house is worth if you wanted to sell it. The replacement cost is, okay, if this house burned totally down, what's it going to cost me to replace it?
Yeah.
So that's all we're concerned with. We're not, if you have a very desirable location, your house can be worth a lot of money. but it's not going to cost that much money to replace it necessarily.
With replacement cost, do you just take all the materials required, or do you include labor into that?
So everything. Yeah. Okay. So every company is going to have a replacement cost estimator where they just ask me a ton of details: the size, the quality, number of bathrooms, the roof, what's you know what I mean, the flooring. They ask me a lot of detailed questions about it, and they'll come up with their own valuation of what they think the replacement cost is, and that's generally what we'll cover it for, unless the person feels like it's low and they want more to make them feel better. That's fine. We can do that.
That or like I'm the bad guy in this. Like we need to make sure it covers the loan amount. And so a lot of times it'll have to be like extended replacement costs. It'll be like 150% of the replacement cost just to ensure that it covers the full loan amount. Because maybe they buy in Park City or somewhere where it's more expensive. The location's desirable, so the replacement cost isn't gonna get them the market value that they're purchasing at.
That makes
sense. Yeah, you'll see on like a lot of the policies that I see, at least it'll be like 150% replacement cost so that it covers the loan.
Yeah, that's another endorsement that I always add is at least 150% replacement cost, because with the volatility of prices on everything right now, what could be fully covered today could be very underinsured in 6 months.
Yeah.
So I always put that on there just in case things change, or if our valuation is just low. We're not going to be 100% accurate on everything, so it's always something I put on there.
Gotcha. You mentioned undercovered, or you can also be overcovered.
Sure.
How often should you be reevaluating your insurance?
Yeah. Right now, you should be looking at it every year.
Every year?
Really all the time, but especially right now with everything changing, once a year is a good, because your home policy is going to renew once a year, and you're gonna want to look at it and make sure everything's looking good.
Yeah. And I guess with that too, I feel like lately, just there's inflation, there's a lot of things, but insurance is going up. What are some of the determining factors in insurance premiums going up? Is it just inflation? Is it more claims? What causes insurance policies to go up?
That's a good question. It's a complicated one, kind of. So I just want to say I don't set the rates, so I'm not the bad guy. I can't control that at all. I wish I could. There's a lot to it. So it was amazing during the COVID hysteria in 2020. Remember, everybody was home. Kids were home from school. Parents a lot of times were home from work, but a lot of parents were working from home, and so the kids were there kind of unsupervised a lot of times. And I heard this from a lot of insurance companies, and I can vouch for it myself because I saw water damage claims go through the roof. Water damage claims all over the place because kids are home doing who knows what. So that's just one example. There's a lot of things that changed, and insurance companies were losing a lot of money on property insurance during that time. So that's a big reason why rates went up and still are up. A lot of people get upset because they didn't go up immediately, because how insurance works is each state has their own insurance commissioner, and they have to approve rates when you come into the state, and any rate changes at any time. So if you want to increase rates, that's fine. You have to submit that to the insurance commissioner. He has to take his time or her time, approve it or deny it. If it gets approved, then you can do it. The process takes time. So it didn't go up immediately because they couldn't. So now it's kind of a delay. So people are like, oh, inflation was a long time ago. It's like, well, we needed to take rate 2 years ago, but we're just being able to start doing that now to kind of right the ship. So there's a lot to it, but as far as property insurance goes, that's a big reason why. There's a lot of claims, paying out a lot of money, and the rates just needed to go up. And so that's what we're seeing now.
This question might be a little conspiratorial. I know that I've seen people talk about a market crash in the housing industry, and it wouldn't be because of the housing market itself, but rather the insurance of a property to continue to rise. Are you seeing a lot of foreclosures on properties because of insurance? What's kind of your take on that?
I haven't seen any that I know of.
Okay.
I don't know if I would hear about them if they did happen. Like I said, I get most of my referrals from the mortgage people. And so usually they're qualified, at least at the time of application, they're qualified.
We would hope so.
So it hasn't been an issue with me, but maybe it happens. I don't know.
like I said, it was conspiratorial, so I just
Yeah.
figured I'd throw it out there.
Yeah, and I mean, usually Utah is kind of unique. We don't get a ton of natural disasters here.
Yeah.
Like just over in Colorado, they get crazy hail every year.
Mm-hmm.
They have to deal with. We get flooding here a little bit. We get some moderate to high winds in certain areas, but we don't get hurricanes. We don't get
Yeah.
tornadoes. We don't get all that crazy stuff. So
California
insurance,
fires.
yeah, exactly. Yeah, insurance in Utah, as far as property insurance, is low compared to other states. Most other states.
That's good.
So, if they go up 50% here, we're probably
Mhm.
just along the lines of the rest of the country
Yeah.
at that point.
Yeah.
So, it sucks. I mean, you don't
Mhm.
want rates to go up, but it's really it could
Mhm.
be a lot worse depending on where you live.
Yeah. Where do you see rates going from this point on?
Most rates are kind of leveling off with most
Okay.
companies. Some are still going up.
Yeah.
I think unnecessarily a lot of times.
Hmm. Well, it sounds like the rates had gone up at a slower pace from COVID, and we're still seeing that even now.
Sure.
Is that still going to be a pattern with whatever the past has shown is what's going to affect rates, or is it going to be the current economy?
Yeah, we're mostly out of that.
Okay.
Stuff was costing. That's another thing. Building materials and labor
Mhm.
was really expensive
Yeah.
for a long time, and that's kind of leveled off. So things are getting better.
Mm-hmm.
There was actually several companies that weren't writing home policies in Utah at all. They're like, we just can't. We don't know what to do.
Yeah.
They're
Mhm.
kind of just so uncertain, and that's kind of changing now. So things are returning to normal. Hopefully rates come down, is my hope. But
Mm-hmm.
that's
I think
not
that's
something I can
everybody's
control.
hope.
Yeah.
So,
For
Rates is
everything.
everything.
we'll see. Like I said, every company's different. Some are still in a tough spot. Some are actually doing quite well now. So
Mhm.
we'll see. We'll see how it goes. But yeah, we're pretty much past that, and just kind of looking to the future with whatever
Yeah.
certainty that holds. I don't know.
Mm-hmm.
Yeah.
So
Are there certain steps that a homeowner can take to lower rates themselves?
sure. Yeah. So there's several discounts. Honestly, the biggest discount is just doing all of your insurance in one place. So
Okay.
if you do your auto and your home and your life and all that stuff under one roof, you're going to get pretty significant discounts
Yeah.
for doing that on all of them. But you can also, there's little discounts if you have alarm, home security alarm system, that'll give you something. There's a few other things that you can do that save you a little bit, but the multi-policy is the big one.
Yeah.
And is that the same thing as bundling?
Yeah,
Yeah,
Okay.
same thing.
That's what I
Yep.
figured. Just wanted to
Yep,
clarify.
just a different term. Yep.
Sweet.
Bundle and save.
There you go.
Yeah, yeah. When it comes to submitting a claim,
Sure.
what's kind of the process with that?
Yeah.
What should they do immediately after? And is there things that they shouldn't do?
Yeah, so I always recommend, no matter what the situation is, just take pictures.
Okay.
Everybody's got a phone and a
Yeah.
camera in their pocket. Just take pictures, even if you think it's unnecessary. Sometimes it is.
Mhm.
Sometimes it's really small and simple, but just do it.
Yeah.
You can always delete them later.
That's
So,
true.
I, as the agent, they don't want me super involved in the claims. I can kind of help facilitate if there's a problem or something. But they have their own, every company has their own claims department with their own claims adjusters that are trained in that area.
Yeah.
They know what's covered and what's not usually. Sometimes they aren't the best, but they have their own claims people that decide what gets paid out and when and everything like that.
Yeah.
So,
How does it differ from like personal, like minor damages versus a larger item?
sure. So that's a good question. No matter what the claim situation is, I recommend calling your agent first.
Okay.
It's kind of tough because if you're with a direct consumer company, like if you called Progressive and got a policy from them, you're not going to have an agent. But if you do have an agent, whether it's me or just somebody else, call them and run it past them.
Yeah.
If it's something small, something that costs $1,200 to fix and your deductible is $1,000,
Mm-hmm.
you're going to get recommended to just pay it out of pocket because your insurance company's only going to pay $200 because
Mm-hmm.
you're still going to pay your deductible, and then your rates are going to go up because you have a claim on there.
Yeah.
So,
Yeah.
so it's not always worth it to make a claim, especially on the smaller things. But for sure, just call your agent and run it past them first. And if they decide that, okay, yes, it's worth to make a claim, call the claims department. They handle it from there.
Yeah. Would you say the same thing for auto as well?
Yeah, auto's a little bit different. Same thing, but certain things like most of the time, this is kind of changing a little bit. Most of the time, a windshield, if you have coverage for your windshield, just get it fixed. They'll pay
Yeah.
for it, whether it's a chip or a replacement or whatever. Some companies have been changing recently where if you have too many of those, they'll start hitting you for them and maybe not even take you.
Yeah.
Mm-hmm.
So, but yeah, if you're not going through a ton of auto glass, just have them do it. It's not going to hit your rates usually. So,
That makes sense.
but yeah, same along the same lines. Though.
Yeah, I'm just asking because a quick plug for Steve. I have the worst luck with cars.
That's the truth.
I've had 3 cars totaled for people hitting me.
Yeah.
3 or 4.
3 that I know of, yeah.
And every time, like, I call Steve and I just say, hey, my car got totaled, or hey, I just got hit. And he always picks up his phone. But I think, like you said, they don't necessarily want the agent to be part of the claims process. But every time you've had to essentially step in and help out,
Yeah,
and
true.
it's saved me thousands of dollars. So I don't know. You can work with an online company like Progressive, but the
Sure.
ability to be able to like call somebody, and when you're calling your insurance agent, like 9 times out of 10, it's not a fun phone call.
That's
But
true.
the fact that you can call somebody that you know and like wants to help you, I think is huge. Like it saved me a ton of
Yeah,
money.
for sure. Yeah.
That doesn't sound like a 5-star review.
There you go.
I
Wow.
don't know what does.
No. So thank you for
Yeah, those are
all of the
tough. They're
cars,
not at
but-
fault.
Yeah.
Especially when you have a newer vehicle.
yeah.
There's just nothing good about that for sure.
Yeah, absolutely. I do kind of want to jump back to you mentioned something about a dog and
Oh, sure.
how they want to make sure that that's covered. When, like, let's say somebody gets rid of their dog or they make changes to their property, like a renovation or something like that, what's the process of reevaluating? Should you reevaluate? How do you let your insurance agent know that those things happen?
Yeah. So we're how do I do this? So we're going to ask questions when you're
Mhm.
applying for an insurance policy.
Yeah.
If you go out the next day and get a pit bull, we're not going to know about that unless you tell us.
Yeah,
So
absolutely.
if you do tell us, it's going to be a problem.
Uh-huh.
But if you don't, it usually will still be covered if something happens because you qualified at the time of application.
Yeah.
So they'll probably cover the damage if something happens, and then
Mhm.
you're going to get canceled. You have to go
Gotcha.
find a different policy.
There you go.
So that's how it works. Same thing with if you do a renovation, finish your basement, upgrade your bathroom, whatever. Just call your
Mhm.
agent and let them know. It's gonna change the value of your house. So just
Yeah.
make sure you have enough coverage is really the big thing there.
Sweet. That makes sense. On this podcast, we do talk about rentals a lot. How does
Okay.
insurance change when you become a landlord? Does it matter if it's a long-term rental or a short-term rental?
Good
Kind of
question.
what changes when
Yeah.
you become
So the coverage is similar,
Mhm.
but it is on a different policy form. So
Okay.
if it's an owner occupied, it's going to be a homeowner's policy. If it's a rental property, it's going to be a landlord's policy. So
What
it
was
is-
that
it does
second
require-
part? What was the second policy?
landlord's policy.
Landlord
It is
policy.
going to be a cancel rewrite. If you go from living in something to renting it out, you'll have to cancel that one. Get a landlord's policy in its place.
Okay.
So, and what was your other question on that?
Short-term rentals.
Oh, yes.
Is that different?
Totally different. For a long time, when that first started, insurance companies were like, "What do we do with this? Like,
Yeah.
this is a new thing. Like, how do we
Yeah.
rate this?" They've kind of figured it out since then. I wouldn't say most, but a lot of companies have an endorsement for a short-term rental now. And then some actually have a separate policy that we write for short-term rental. But there is easy solutions for that now you can get, and they're usually pretty competitively priced as
Mhm.
well. It's usually not too bad.
Yeah.
So
When it comes to the claims policy on a rental property,
mhm.
either the tenants or the manager is going to be the ones documenting the
Yeah.
event. Does that cause problems at all in it? If it's not documented immediately, if it's been sitting like that for a little while, or if a property is vacant, how
Mm.
does that affect things?
Well, so if a property is vacant, you have to have a vacant policy for it.
Okay.
Like they won't do if an insurance company knows a house is vacant, they won't write a policy for it. It has
Okay.
to be a vacant, some sort of specialty
Yeah.
vacant
Yeah.
house policy,
Okay.
which is out there, but they are pretty expensive
Yeah.
because if something happens, nobody's gonna know about it for a long
Yeah.
time.
Yeah. Is there a term length on that for how long you have to have that for?
Good question. I'm not sure. I think
Okay.
every company's going to be different.
Yeah.
But again, going back, like if you lived in your house, got a policy from me, and then moved out, left it vacant, and didn't tell me, I'm not going to know.
Yeah.
So
Mhm.
so if it's all about the time of application. So if it's
Yeah.
vacant when you're applying for a policy, it's going to be a vacant
Yeah.
policy.
Because
It's
the
like-
scenario in my head that's happening is a property's not always rented out, right?
Sure,
So if you're
sure.
having a turn, a tenant moves out and then
I
it
see what
sits
you're
on the
saying.
market for 2 months because it's just a hard season. Say it's December, nobody wants to move in December.
Sure.
Should you apply for a vacant policy during that time?
You'll be fine. If it's a rental property, it's actively looking to be rented,
Mm-hmm.
and somebody's going to be moving into it soon. You'll be fine with that.
Okay.
Yeah.
Sweet.
Yeah,
That's
so
good enough.
No, it would create more work and problems to rewrite it into a vacant policy and
Yeah.
then back into a. I
Mhm.
mean, nobody stays into a rental forever. You can be doing that constantly. So,
Yeah.
Yeah. It's.
No, exactly.
I have to. That's a good question. I'll have to look up if there is a time,
Mm-hmm.
a specific time limit for that. That's a good question.
Yeah.
Well, sweet. I'm good for questions. What are there things that you wanted to, like, what things should people know when thinking about insurance, whether it's getting insurance, getting into insurance?
Yeah, good question. Just talk to your agent. They know what they're talking about usually if they have some experience.
Mm-hmm.
They're going to be able to walk you through, the most common claims that they see. Here's a solution to cover those. Make sure you're covered,
Yeah.
and then just go through it. Go through it once a year. You're gonna get, if you have a property policy, you're going to get mail, like probably more than you want. That's why most people probably just throw it away. But take the time, especially around renewal time. They're gonna send you about 30 to 45 days in advance your renewal,
Uh-huh.
and just take a look at it. If anything
Mhm.
jumps out to you, I feel like I need more coverage, or I thought this was covered, or my deductible's really high, or the price is way up. Just call.
Yeah.
It's a simple phone call. I get those phone calls all the time. And I'm happy to go through and requote because I'm independent,
Yeah.
or make changes, whatever. It's easy. So
Awesome.
Sweet.
Well, Steve, thank you for coming on the podcast.
yeah, appreciate
Personally,
you guys.
I learned a ton about insurance that I didn't know. My whole sheet is covered in notes
There you go.
that I'm
Love it.
definitely going to review and internalize. So
There
thank
you
you
go.
for coming
Perfect.
on. We really appreciate you doing this.
Thanks,
Yeah.
guys.
And how can people get in touch with you?
Oh yeah, the website's probably easiest. grandviewinsurer.com, or just call me at the office 801-972-9800.
Sweet.
Awesome.
Yeah, thank you.
Thank you, Steve.
Thanks, guys.
The One Stop Real Estate Podcast is a production of Vision Real Estate.
I'm TJ Shelley with First Colony Mortgage, NMLS 1674331, with First Colony Mortgage, company license 3112.